Hey, welcome back. We're glad to have you. This is Stewart Foley, and we're on the insuranceaum.com podcast. Before we get going too far, I want to make mention of our upcoming private credit and ABF event in beautiful Austin, Texas on November 5th and 6th. If you are an insurance investment allocator, you are more than welcome to attend. We'd love to see you. We're going to have some fun activities and a bunch of a little bit of Texas flair here and there. And we've got some, it's a beautiful venue and the weather will be terrific. So you can find it on our website at insuranceaum.com, and the hamburger menu in the upper left, just click on events and it's the first one listed. Again, it's the insurer's private credit ABF forum here in beautiful Austin, Texas. And today we have a very special guest for you. We've had a lot of asset managers on. We've had CIOs on, and today we get to have a regulator on, and not only a regulator, but one that is very well liked out there among. She's so accessible, as evidenced by today being on the podcast with us. So our guest today is Carrie Mears, who's Chief Investment Specialist for the Insurance Division of the Iowa Department of Insurance and Financial Services. You've been in that role since 2018. You lead investment policy, oversee insurer portfolio hedging programs, represent Iowa at the NAIC. You are the chair of the NAIC Valuation of Securities Task Force. You're the vice chair of the Macro Prudential Working Group and a member of the IAIS Macro Prudential Supervision Working Group. You're a CFA charter holder. You are also an industry vet. Welcome, Carrie. How are you?
Hi. Wow. I'm not used to those kinds of introductions. That's kind of fun.
So we always start these podcasts off like this. Like, where did you grow up? And we've been asking, what was your first job? Not the fancy one. Or you can answer, what was your first concert?
Ooh, okay. I mean, I can do all of those things. So we'll see.
Okay. We'll take it.
I was actually, and I think we have a connection here, if I remember right, born outside of St. Louis. So in St. Charles. And then we moved to the Kansas City area when I was in middle school. So Midwest, born and raised, went to college at University of Illinois, lived in Chicago for a hot minute, and then moved over to Des Moines. I've been in Des Moines since 2022, which probably you start doing math on my age now, but or 2022. Goodness, 2002. I can't even keep track of time now. 2002, yes.
So you were born like northwest of St. Louis, and I was born straight south of St. Louis in Imperial, Missouri, which is the next town past the Arnold Water Tower on Interstate 55. Between the Richardson Road exit,
12.
Right?
So you give me landmarks, and I'm not. I got nothing. But I do remember going to St. Louis Cardinals games and seeing Ozzie Smith do backflips. So that's... Yes. I was in. That was like high school for me, and it was really a good time to be in St. Louis. I mean, Cardinals were amazing at that point. So. It's interesting. You have an interesting career because you've got industry background. You've worked. In fact, I was on the phone this week with Jack Bishop at Principal, and I believe you used to work with him. I did used to work with
some
Jack
time ago. Can you talk a little bit about your background and what led you to regulation? Just talk a little bit about like kind of how you got there. There are people who I'm confident who are listening to this podcast who would consider a career there and but maybe they don't know how.
Sure. So I guess going back to your initial question, I can start that my very first job was working at a retirement home in the dining hall serving dinner. So that probably did not lead me here, although I suppose many of those people did have great insurance policies in their day. And so thinking about people aging and needing those, maybe we can make some sort of connection there. But
my mother's 88, and she is she stays in a skilled nursing facility across literally like 2 minutes from my house. And if you go there
perfect.
at lunchtime, I can tell you that is tough duty in the lunchroom of a nursing
happening
home.
place, right?
There's a lot
Happening
going
place.
on. Yeah,
So
there is.
much. It was fun. So I, right out of school, I was supposed to work for Arthur Andersen. So this will date me as well, and to never got to my first day of work because that's when Enron happened, and they just effectively disintegrated before my eyes. So the job that I thought I had, very solidified, went away, and through kind of a course of events, ended up in Des Moines, and worked very briefly for an accounting firm here, and just really it wasn't my jam. So had moved over to industry and started more on the accounting side, but worked with derivatives and hedging policy and hedging strategies and policy around that. So did that for several years, really enjoyed it. I think one of my favorite parts was working with the business units and the actuaries and the business units and the portfolio management team, just kind of thinking about how all those things fit together. So decided I was pretty interested in that. Went back to school for a graduate degree, did my CFA charter, and then ended up moving over more to that side to continue that work kind of effectively an asset liability management role. So then did that for several more years. And then this position came up at division. It was one of those word of mouth kind of things. It wasn't really posted anywhere. It had not existed before, but kind of caught wind of that and thought it sounded interesting. Had lunch with the commissioner, and then here I am 7 years later.
Here you are.
Yeah.
Well, I think it's interesting that like with insurance regulation, and I had the good fortune of attending the NAIC's national meeting in Minneapolis, where we actually bumped into each other. I did not appreciate how large and how broad and how many people were going to be there.
Huge.
It was huge.
It's very overwhelming the first time you go.
And yes. But so you have a role in Iowa, you have a role with the NAIC. Talk a little bit about like what's your day to day when just leading investment policy at the division. Like, what does that look like day to day?
Well, I know it's probably a very standard answer you get from most people, but no day is the same, and it really just depends on what's going on. The joke is, well, not the joke. The real story is, my primary role and really my main focus would be working for the state of Iowa. And that means overseeing the companies that are actually domiciled in Iowa and having consistent communication with them. We have obviously regular cadence type meetings, say on a quarterly basis to get updates on, what's happened over the quarter, issues they may be having, observations they have, just updates from risk management and performance and things like that. But honestly, with most of them, it's a lot of ad hoc type of meetings too. We're very both fortunate and purposeful in the fact that within Iowa, we've built out with at least most of our insurers, very transparent relationships. So we do have where they feel very comfortable picking up the phone, or I suppose picking up the Zoom now and reaching out and saying, we're working on this transaction, we're looking at this strategy, we're making this type of change. Can we run it by you, get your thoughts? And so we can be very proactive with those types of issues. And I realize that not everyone's like that with the regulators. So I think that puts us in a really good position. And I think the insurers domiciled here would ideally say the same. And that really then informs the things that we can do on a national level. And so Iowa as a whole is very involved in national initiatives. I just have some fantastic colleagues. And we're super fortunate to have a lot of support from, our government and our division to make sure we're getting the right people in the right places. And we don't have, one person that's wearing 45 different hats. We can at least remain fairly focused on our key areas of expertise. So that's been just really good support from the state of Iowa, really good relationships with the insurers that they feel comfortable coming to us. And so really, it just depends. If I'm working on a key thing at the NAIC, that could take up all my time for a week. But it may be that some weeks we're doing company meetings all week. And then I throw in, as you noted, I work on some international issues too, which involves travel. So then add all those things together, and it's ultimately 3 jobs instead of 1. But they really all feed into one another, and that's what makes it manageable.
You know what they told me at the University of Chicago? They said, busy people find a way. I thought,
yeah, I think I'm more efficient when I have more to do. I
yeah,
would say
no,
that's absolutely true, right?
for sure, right? So you chair the NAIC's Valuation of Securities Task Force.
Yes, very unfortunately named.
There's restructuring underway. What changes should insurers expect, and what are the big issues on the table today? And like,
Sure.
just for whatever it's worth for our audience, like we don't have an axe one way or the other. Like we don't want anything. We're not angling for anything.
Yeah.
But at the end of the day, I think a lot of people who talk to you are angling for something.
That's
What
probably true.
what are the big issues that are facing you today that if folks don't necessarily follow the NAIC meeting circuit and so forth, I mean, just in a
What do
high
they
level.
care about? Yeah.
Yeah.
So Valuation of Securities Task Force, as I joked, is unfortunately named because we really don't do much with the valuation of securities. Obviously, back in the day, that was more relevant, but the role has kind of evolved over time, not so much the name. But historically, even that task force, maybe, I say historically, even like in the last, multitude of years, really has focused on credit risk assessment. So looking at, bonds within the portfolio and ensuring that they have some adequate measure of credit risk that can be utilized for a variety of sources. Investment people use quality measures for a lot of things, even asset allocation and investment guidelines and things like that. And then most importantly, in insurance, it drives how much capital needs to be held against those types of investments. And one thing, while that's still super important, credit is obviously a huge part of most insurers' portfolio, particularly, more asset-intensive life insurers. Recognizing that we needed something a little bit more broad. And so we established that starting at the beginning of next year in 2026, they'll become more the invested assets task force. So that's just they're able to pull in investments more like mortgages, real estate, equities, whatever it may be, to really have a more holistic view of the whole portfolio. And then really a secondary component of that is people may not be super familiar with our committee structure, but there's, as you've noticed from probably attending the meeting, there's a lot of groups, right? And they all kind of feed into a tree with one another. And traditionally, you have these working groups that are staffed by insurance staff like myself that are really working on the nitty gritty of everything. And that flows up into a task force, which is traditionally the members are the commissioners, the leads of each state. And then they're able to look at that, whatever the issue it is, whatever key policy was adopted, can look at that at a more holistic level, as then they, approve that for continue to move forward. And Valuation of Securities Task Force historically had no working groups underneath it. So it's kind of in this dual role where it was doing these more specific policies, really down in the weeds, and then, immediately it went past that group up to kind of our overarching committees. And so I think it was really helpful, and the feedback we got from industry is to have some separation there so we can really be more like some of the other groups within the NAIC and have some of those smaller working groups that are really working on the details of everything, and then have that task force be more commissioner-led. And so realistically, staff like me end up helping out a lot. So you'll probably see my face on that as well, but really trying to make sure commissioners are staying engaged and educated. We plan to use that task force as an education forum. And so certainly welcome any of your listeners if they have key issues they think, really, hey, these regulators should know what's going on here. This is a big update. And sometimes we have them reaching out at national meetings and kind of doing one-on-one meetings. Hey, bring it to this task force. You'll get everybody at once. And we can do that in public. And we'll keep those working groups then focused on, really key issues. So we'll have one that continues the traditional work of the task force related to credit risk assessment. We'll have one that is going to implement a procedure that we're putting in place for due diligence over the use of credit rating providers. And then we'll have one that's kind of more of a catch-all investment analysis working group that's really looking at key issues as they percolate up, working on some of that education, looking at specific companies, things that may need more assessment, and putting together reports that can then ultimately go up to that task force. So I'm actually really, really excited for this restructure. I think, one, it will give people a lot of opportunities to kind of step up to the table and work on things and spread out the work a little bit. And I think really what's probably most important then to listeners is realizing that, they have a resource that they can go to as well when they're looking for that education, or even to provide it. We'll be reaching out for that as well, so we can have a lot of that dialogue with even what insurers themselves are seeing.
Yeah, that's super helpful. So from your vantage point, and we've talked a little bit about this, but there's a rapid growth of private assets, right? Whether that's credit, structure, other new asset classes, right?
Right.
I don't want to put words in your mouth, but from my seat, it looks like you want greater transparency of what is actually being held. Mm-hmm. Can you talk a little bit about how regulators are viewing this growth in these private assets? And is there any sort of, I don't know. I mean, there are efforts to make things be more capital efficient. It's one of these things where, people are trying to, you wonder, is the underlying, what's the underlying? That's the name of the game here, I think. But
I think you've got it.
Talk to us about it, right?
Sure. So yes, I think, probably very recently, private credit is kind of the topic du jour. I think you led off this podcast, right, with your upcoming forum related to that. But I would say, yes, we've at least somewhat had a head start within insurance for that to some extent. So we have so many initiatives that are already in place that are really addressing what some of those underlying concerns are. And it's, probably more related just to asset strategies in general. And these things would also be applicable to whatever you want to put in that private credit category, which I know people have different views on what that is. But if we think about we've seen, increasing, probably the biggest structural shift we've seen within the US in terms of investments is really a move towards securitizations and structured assets. And then obviously a lot of those don't necessarily fit into the private category, but more do, with kind of more this asset-backed finance. And then, the kind of catchphrase is, bringing it to financing the real economy and bringing that onto insurers' balance sheets. And so generally, there's no issues surrounding that, except to the point that you made is we have a lot of disclosures around investments, and they're very not descriptive. So it's really difficult for, a regulator like myself, if I'm not able to go in and work with individual insurers to get details on some of those, to really get a sense of, are the credit quality of these being accurately represented? Is the capital being held appropriate? Is it even reported in the right place? And so I think probably one of the biggest changes we've had that will be fully implemented at the end of this year, it was technically effective at the beginning, is our principles-based bond definition. And so what that said is, a lot of things, we have rules around bonds and certain capital treatment for bonds, but, got to a point where you can make a bond out of anything. And so provided some more specifics around what types of characteristics you need to be able to be called a bond. And so that's pretty seismic shift to have those principles in place rather than just making a list of, bond types that would be acceptable. And so we can use that type of information then and potentially some additional disclosure that'll be at the end of this year to help with that assessment of, credit quality, the use of deferring interest payments and how that could impact liquidity. We'll have some disclosures around that, how we're looking at capital factors, because right now we're looking at changing those for at least specifically CLOs, but ongoing likely asset-backed securities overall. And so we're really headed in that direction of trying to look, to your point, kind of under the hood of what some of these types of investments are, and just make sure that we're reflecting those characteristics underneath using the principles that we're putting out, rather than using the rules that we've always had in place that may have not contemplated some of these types of investments. So from that perspective, you can call it private credit. You can get, dig in and say that, okay, well, that's, if it's strict lending to, small or more middle market companies, it already kind of fits into that overall structure. So I don't know that we really need to do anything particularly different than what we're doing, as much as it falls overarchingly into some of those, focus on some of those principles that we're laying out.
So I mentioned earlier that you have a role at IAIS,
It's
which gives
really
you,
difficult to say.
and it is, uh, it gives you a global perspective, right? And
Yes.
other regimes, Solvency II is very different than what we do here. The Bermuda Monetary Authority. There are other
Mhm.
insurance regulatory entities around. Is there anything that you see? Is there convergence? Is there anything that we can learn from each other? Like, how is it? How
Yeah.
is it?
How does that work?
What influence is your global lens had on your domestic lens? Maybe.
I think it goes both ways. I know there's been concerns about forced convergence, I think, between some of the jurisdictions. And one of the things we've really stood by, at least from the US, and I think it's being seen, across the board, is that really all of our regulatory frameworks were built out of what was needed from what was in the jurisdiction, the types of products we offer, what the types of liabilities are overarchingly. And not all, sometimes that's a little bit circuitous that you build a framework so the liabilities are built to be responsive to that, but often it's tax codes, it's what's available for retirement. If you have a national pension plan or something along those lines, obviously your needs to meet some of those societal requirements are different amongst jurisdictions. So I think there's an increasingly good recognition of that. I may be more optimistic than some, but I do see that, of realizing that there is a reason that some of these jurisdictions have different frameworks, to approach those types of liabilities. And
Sure.
so then you're going back to, I think, this concept of just using principles is really, what gets carried through. And so we can say, even bringing it back just to the investment side, one of the things we've highlighted, even on a global scale, is shifts in asset portfolios. And we said, well, okay, for example, I pointed out in the US, securitizations, you don't really see that for various reasons. In Europe, they have, some capital restraints around that. But that doesn't mean they don't still have increase in some complex assets, increase in more illiquid assets, in assets that maybe have some difficulties in ascertaining what the valuations would be. And so it really doesn't matter what call it, you're more concerned about those attributes. And so that's where we can really, have more dialogue and say, okay, what are some, maybe best practices in place, or how are you approaching this, or what are some risks that we can identify that we can all collectively address, but it might be obviously for different types of assets in different types of ways. It's just the concept of ensuring that we have, back to that transparency, that you have the right capabilities in place at the insurer, and kind of the risk management and governance that surrounds those, the understanding of how those assets could perform in different types of environments. That overarching kind of more holistic approach applies everywhere, no matter what the asset is. And so I think that's where you get some of the dialogue back and forth. That's super helpful.
Yeah, that's very helpful. So, kind of we'll get into a fun question or two, but having worked across, you've worked in the investment management business, you've been in the regulatory leadership. What are some lessons or insights that would be helpful to CIOs and insurance investment portfolio managers as they listen in today? Like,
Yeah.
is there anything that you would say, hey, keep X in mind or whatever?
Yeah. A few things. I do think, it is really actually helpful to be transparent with your regulator, and I appreciate that that's not in the culture of some insurers. But I think if you were able to talk to some where they feel like they can go to their regulator and kind of explain what they're working on and try to provide that education, that generally is very positive for them. We're known, at least in Iowa, we're known to be fairly tough in that we challenge things and ask a lot of questions and really try to kind of peel back all the layers to understand the underlying risks and the types of transactions we see. But we're also willing to listen and learn and hear about new things and receive that education, and then apply our regulatory lens on top of that. And so it's really helpful to do that up front, because then you can build out, whatever it is that you're working on with that lens already in place versus possibly having something come up in examination later and having to kind of unravel all of it. That's not a place anyone wants to be. And so that transparency, I think, is incredibly helpful. Otherwise, we as regulators may tend to overcorrect for the things that we don't understand or that we don't know. If we see kind of a black box there, we're having to put some sort of control around that, and we may not be doing really the most pragmatic or best thing because we don't really know what's underneath there. So the transparency kind of goes both ways. So to be that transparent with us, and we can be very open about what our thoughts and views are and how we'd like to address that going forward. I think the other big one I'd probably say is just to some extent a reminder that in the end, despite the fact that, we're in this insurance AUM, we're talking about investments, obviously this very asset focused, insurance is liability focused. It exists for the liabilities. It exists for the policyholders. It doesn't exist just to originate more assets. And obviously that balance is getting a little upended with a lot of the entrants into the market. And there's absolutely a symbiotic relationship there, right, with the types of assets that you can see, some of the investment changes in the market, and how that can ultimately support better products and better outcomes for policyholders. And that's recognized. But in the end, it's the policyholders that matter. And really ensuring that that lens is always in place as you're looking at potential new initiatives within any of the companies. It's really important to have that relationship with your liability teams, keep the actuaries informed, the ones that have to kind of think about pricing and asset adequacy testing. We've really tried to build some initiatives in place that kind of force those conversations to occur and make sure it's really an asset liability management driven organization versus just a focus on the assets.
It's good stuff. All right. So fun ones. You ready?
Sure.
What characteristics do you look for when you're adding to members of your team is the usual question. Okay. But for this, I sort of like, what makes a good regulator? Like when somebody comes out of school and they may be interested in learning more, like what characteristics do you see? And you have a really big, you see a lot.
Yeah.
What characteristics do you think make for a good regulator?
I think it's really trying to balance effectively like skepticism, which is important on this end, but with pragmatism. So I think you can easily fall into one or the other too easily. It is our job to challenge, it is our job to question. And so we can be kind of tough and sometimes need lots of dialogue with an insurer to really walk through where our concerns are and where we're going to poke holes in something. But on the flip side, it's very easy for a regulator to fall in the trap of just disallowing things or saying no or putting huge capital charges on something without really fully appreciating the actual underlying risks. And so I think some sense of pragmatism and ability to welcome education, constantly be trying to learn of what's going on in the market, where new opportunities and enhancements and innovations may be, trying to think about how that fits into the framework we have already, or what are the missing pieces that we need to address, but in a way that ensures everything can move forward appropriately. And finding that very good balance between those two, I think, is what is probably the most effective way a regulator can then interact with insurers.
All right, last one, fun one.
Okay.
You can have dinner with up to 3 guests.
Oh shoot, I forgot about this one.
Who would you?
Oh no.
See, this is the fun part.
Okay.
Who would you?
Oh shoot.
Who would you most like to have lunch with, alive or dead? Now it doesn't have to be all 3. You can take 1, 2, or 3.
Or 3.
Yeah.
Oh, pressure's on. Okay.
No pressure. No pressure.
I know. Well, see, I'm supposed to try to come up with someone like that makes me sound really, really smart, right? And it should be a world leader or something.
Someone the other day said their family. Hey, there's no bad answers on here.
Yeah, always. That's a good one. Okay, no, I do have one, and that's actually because I was just talking to my kids about this recently too. I'm kind of obsessed with like the history of food, like how did our ancestors like realize like how you can manipulate food, with fire or cold or, pressure or whatever it is, and come up with things that were actually edible, beyond just foraging and,
I
throwing
think that's true. Like
out there.
coffee. Like to me, when you look at a coffee bean, you go, "How did you guys come up with that? You can make something like you can make coffee out of this? Like this looks nothing like coffee, right?
Yeah, like who thought through this?
Who figured it out? Yeah.
So we're talking about this. I would want to be at the dinner table the first time someone made like a true, like fluffy, yeast-filled loaf of bread. So not the flat, just kind of beady bread that probably exists first. When they first said, like, let's let this sit and, rise a little bit, and then we'll heat it up and it'll be really squishy and really excellent. And the first time they sat down and put that on the table and you got to try that, that's where I'd want to be. So I don't have dinner with that person.
That's
lunch,
a great,
or whomever that would be.
Answer.
And,
that's a great
and
answer.
I want to bring on my grandma because I miss her. So my grandma too.
Yeah, that's sweet. I was just talking about my grandmother this weekend. We my grandmother was a really big influence on my life as well. So I can relate on that front. But the person who invented bread, I'm in with you. I'm a bread fan myself.
Right?
Absolutely.
Ooh. And then we could fast forward a little bit to the first pizza. So then they were like, oh, this would work as a crust, for cheese and cured meats.
No, I think it's actually
Super
great.
there.
And like how do you come up with like, oh, well, this cures, like how do you figure out to like maybe I
leave it out.
I never claim to be bright here, but at the end of the day, like, how do you figure out cheese? Like, how does that work?
Oh, right.
Right.
And all the different types. Or gosh, if you think about like aged liquor that like is aged beyond someone's actual lifespan. So they just kind of had to like, I'm going to keep working on this and hopefully my grandkids think it's good. Like, I never even know.
That's right. That's right. That's true. I really appreciate you being on. So, it's been fun.
Right, well, now we have a complete meal.
There you go. But it's been fun. And thanks for coming on. It's, I hope you come back again. And, thanks for sharing your views and giving us a little bit of the behind the scenes. So, thanks for taking the time.
Yes. And thanks for coming to our meeting, and hopefully I see you at a future one.
Absolutely. Thanks for listening. The title of the podcast has been Current Happenings in Insurance Investment Regulation. Our guest has been Carrie Mears, Chief Investment Specialist for the Insurance Division of the Iowa Department of Insurance and Financial Services. If you like what we do here, please rate us, review us on Apple Podcasts, Spotify, or our brand new YouTube channel at Insurance AUM Community. My name's Stewart Foley. We're the home of the world's smartest money at insuranceaum.com.